on today's episode of the Cryptoverse. Let us do a rundown of the 6 banking scandals that in the world of cryptocurrencies will be a thing of the past. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 8th of February, 2017, so let us begin the episode. Once a day, we take a trip over to coinmarketcap.com to take a look at the biggest winner and the biggest loser in the world of cryptocurrencies. Now, a surprise today, don't see this very often, but the third most capitalized coin is Ripple, and a Ripple token is now worth about 0.8 of a cent. And it's gone up 19.53% in the last 24 hours. Now, I don't think that's an error. I don't think that's a data error. It's happened on the back of $1.1 million worth of trading volume, as you'll see right here. So that seems quite a big jump for such a small amount of transactional activity. But there it is. So if you don't know what Ripple is, it's a little bit of an outsider. I don't think it's staying true to the whole crypto ethos in terms of taking back control of the banking system and putting it in the hands of the people. And I say that because Ripple specifically is taking the idea of a ledger consensus, making sure that all the banking ledgers are up to date and doing that with some kind of settlement network. So it's bringing sort of the benefits and the experience of cryptocurrencies to the end user, and it still keeps banks in control of the system, which is why, I have this funny voice, this kind of hesitant voice on when I talk about Ripple. It's great technology, but I just don't think the ethos is in the right place myself. Anyway, biggest loser of the day is Steam. At 12th by market cap, a Steam token is now worth 15 cents, and it puts it down 9.53% for the day. And looking at the little 7-day trend chart down there, Steam's fell a little bit recently. It's not a lot though. I think it was 16 or 17 cents and it's dropped a little bit from there. Steam remains as the 12th most capitalized coin at around $35 million market cap. Taking a stopover then at bitcoinwisdom.com to take a look at the Bitcoin price chart in US dollars according to Bitstamp. Now, a bit of a red candle today, but nothing out of the ordinary. Crucially, we're seeing here that we're holding above the $1,000 mark, and we have set yet another new high. That's the good news for today. Now, yesterday we set a new high of $1,056.30, and then today that has been replaced by another new high of $1,070 dead. Now, the only other thing I did today was to redraw one of my old longer-term trend lines, which has actually resumed. You see this long grey line here. It's a shame I can't colour the trend lines on this chart because they're all grey, but I'll do my best to point out what I'm talking about. So this was a previously established trend line here, and it kind of broke when all this shenanigans went on. However, it seems to have resumed if you delete that anomaly. If we carry on like this, then I estimate that, if I pull the chart forward a bit here, that within 3 or 4 more candles, if this trend goes up and continues at the same range, then we'll reach that target of 1124. After that, I expect a pullback to the trend line, which is why I redrew it in the first place. And also note that my blue line here, which is my 50-day exponential moving average, most recently is roughly in line. It's roughly following my grey trend line. So that's a good confluence of factors as well. A quick stopover on the Litecoin network then to see how SegWit is getting on today. We have 3% miner support on SegWit. On the Litecoin network, that's actually down from yesterday. Yesterday it was 3.05%, so it has dropped a little bit in the last 24 hours. In contrast, if we look at SegWit on the Bitcoin network, it's gone up by 0.5%. So SegWit on Bitcoin is now 24.5% consensus. Still not enough, and of course, Bitcoin has that higher standard of proof. It has a 95% threshold versus the 75 on Litecoin, so it should be going quicker if it's going to have a chance of getting there. So we'll keep an eye on them, and then we'll see which one gets there first. In terms of the news today, that I've turned to the Merkle, themerkle.com. Now this headline is pretty brutal. It says 6 banking scandals illustrating how powerless consumers really are. Brutal, but no less true. The operative word here being powerless, meaning the power is in the hands of someone else, and that would be in opposition to empowered, which is where the individual has power over themselves. You know, if only someone could invent a new type of money that would empower people to take charge of their own financial lives. Oh, that's right, someone did, back in 2009. How lucky are we? So let's see what kind of financial tyranny we can look forward to putting in the rearview mirror. So number 6 is LIBOR rigging from 2012. In the year 2012, various banks were found guilty of inflating and deflating their interest rates to profit from trades. The LIBOR average interest rate underpins, wait for it, $350 trillion in derivatives, which means this scandal was nothing less than a large-scale price-fixing scandal. $350 trillion of derivatives. Now LIBOR, it's an acronym, it stands for London Interbank Offered Rate. Basically, it's the interest rate that banks pay when they lend money to each other. And in this case, instead of competing in the free market, the banks decided to fix LIBOR and make some easy money. Now, if the banks are borrowing from each other and then lending out to retail customers, that would basically mean that the retail customer would, say, shop around at different banks to find the best rate for a loan, and they would find that these rates were oddly similar everywhere that they went, right? And that would make sure that all the banks had a guaranteed profit margin, and they were not under threat by another bank, say, coming along and offering a better rate to the end customer and taking all the business at a lower profit margin. So that's essentially what price fixing is, and it's disgusting. It's only possible when there are private markets where the average Joe has actually no idea what's going on. Because if it's out in the open, of course it's easier to catch, and the perpetrators are unlikely to do it in the first place. So moving on to Wells Fargo. They engaged in some bad behavior around 2009. It says here that Wells Fargo paid a $175 million fine to settle discriminatory accusations. During the housing boom, the bank allegedly was less eager to loan money to Hispanic and African American clients. Right, so if you're a Hispanic or an African American looking to borrow money in the Bitcoin community, well, racists don't have to cause you any problems. If a Hispanic person posts a loan request on BTC Jam, for example, the racists just won't fund that particular loan. The reason that's not a problem is because there will be hundreds of other investors ready to fund that loan and who couldn't care less about race, and instead will be paying much closer attention to things like credit rating and the reputation that the borrower has on the site, which are far more objective indicators of risk, which is the eye that you should be looking at when you're assessing investments. So going on to number 4 then, it says the Kabul bank fraud from 2010. An undisclosed Kabul bank, undisclosed, whatever, based in Afghanistan, took $861 million of the Afghan economy through a large-scale fake loans scheme. These loans were issued to 19 different companies and individuals. In the end, the bank had to be bailed out. Now, while this is scant on the details, I think I know how this was possible. In the fractional reserve banking system, a bank doesn't have to have $860 million in cash in order to lend out that kind of money. They only need a fraction of it, hence the name fractional reserve banking. So they maybe had $86 million in cash deposits, and that enabled them to lend $860 million, which was effectively them creating $770 million in new money. That's like printed money, if you like, which they then used to issue those loans to fake companies, and they most likely paid that money to themselves instead, or their cronies anyway. So this is one of the most superior features of Bitcoin. It's a hard currency. It has a maximum total supply, and new money is created at a steady and predictable rate of 12.5 Bitcoins every 10 minutes. And that cannot be changed without consensus from the network. So there we go. Number 3 is Bank of America, a scandal from 2009. It says the institution allegedly misled shareholders about the bonuses paid to Merrill Lynch employees before both institutions merged. Bonuses in the financial sector have always been subject to speculation, as many feel they should not be paid out during these harsh economic times. Now, it doesn't take a master's degree in economics for the average person to say, back in 2008, when they're experiencing financial hardship, and then they hear that the big banks, who supposedly were losing money, had to be bailed out, and then they are paying out record sums of money that run into the billions to their bankers, their executives in bonus payments. So you put all that together and it just doesn't make sense, does it? I think most people would question how that's even possible, and without a logical explanation, those people can only conclude that something corrupt is going on, right? So number 2 is HSBC's insufficient anti-money laundering rules, a scandal from 2012. It says in 2012, after it became apparent that the bank's lackluster anti-money laundering precautions allowed Mexican drug cartels and Iranian terrorists to gain access to the US dollar. By blocking transactions involved in terrorism and crime, HSBC felt they had done enough to prevent these problems. Clearly not. In the end, the bank had to pay, wait for it, $1.9 billion in fines to both the US and the British regulators. Oh, the irony. You mean a major bank failed to prevent money laundering by a drug cartel? Oh, that's just fantastic. You would think the major banks would be too preoccupied with securing their own banking system from being used by terrorists, criminals, and drug dealers to have the audacity to criticize our shiny new financial system. And number 1, more recently, is Wells Fargo's fraudulent account creation from 2016. The bank created millions of bogus accounts without alerting their customers of this practice. Over 5,000 employees were involved in creating and managing these accounts as they aimed to meet sales quotas and earning bonuses. Consumers are absolutely powerless against such schemes. It says to earn bonuses. This is basically saying that fraud is actively encouraged and rewarded in the old banking system, and that is just how the incentives are set up. What do I always say? Don't blame the people, blame the system. It's not the fault of the people. They are just wanting to get paid, and they're playing by the rules as they see them. It's the rules that are flawed. And the major flaw in the design of the old banking system is that it's based on a third party having custody of your financial assets, meaning they can initiate transactions without your explicit consent. In the crypto world, we have to give explicit authorization for every transaction by signing it with our private key, meaning that this type of fraud is impossible to carry out. So be your own bank, my friends, and let's peacefully take back control of the money system. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.